All right, scholars, we're now ready to take a look at some of the ethical standards of the AICPA's Code of Professional Conduct. And recall, there are 3 separate sections to it. There's a section for members in public practice, there's a section for members in industry, and there's a section for people who aren't working, which means they're retired or between jobs. We have all of the various standards, and remember, the Code of Conduct may not absolutely address every possible situation that occurs. So we have the threats and safeguards approach. We have 7 threats that we have to be aware of. We're going to discuss them with you and give you examples so that you're ready to answer any question the examiners could throw at you. Let's begin. We're going to start by covering the types of members and the types of rules. As we indicated, this chart should jump off the page to you because it includes independence rules. So, our first thought, when it comes to threats to compliance, we have 7 different threats. And you'll notice whether you happen to be a member in public practice, a member in business. Now, in this case, you could still have a threat to any of these 7. And then, of course, just the threat to independence could also be there. You'll notice here that we're talking about the adverse interest threat. While the code includes 7 threats, there are 3 different conceptual frameworks, as we said. The overarching theme is the same. The biggest difference is who the conflict is with. For public practice in general, it's with the client. All right? For industry, it's with your employer. And for independence, it's with the attest client. And a great example of this would be in the area of litigation against the client. In other words, the client has ultimately said to you in this particular case, I'm going to be suing you. Or maybe you've threatened it. So whether it's actual litigation or the threat of litigation, that becomes an issue. The next area is the advocacy threat. Examples of this are promoting the sale of the attest client's securities. That's always going to be one. So promoting the sale of an attest client's securities would be a great example of this. Or trying to promote and sell their products, appearing in commercials, or literally appearing in advertisements, standing next to them, would clearly be an issue. And once again, public practice, the issue is the client. In members in business, it's dealing with the organization. So you see that we have all of those issues to be applied. The next one is the familiarity threat. And when it comes to the familiarity threat, some examples of this are, say the CFO stops reviewing work of the controller because of past quality controls. Well, you have to have the review process. So obviously, another classic example of familiarity would be, say, the auditor and one of the officers of the company are literally very close friends, or they have business relationships. So once again, the threat here, if you're in public practice, is with your client. Obviously, if you're in business, it's with your employer. Maybe you have too close a relationship with a vendor or a customer. The next threat is the management participation threat. Now here, obviously, it doesn't apply to people in industry. Some examples of this would be posting journal entries to the client's general ledger without the client's approval. Classic example. Or possibly you're involved in hiring people, managing the people within that client's industry. So if you're hiring the client's personnel, you're firing them, you're managing them, then ultimately you have a management participation threat. Our next one is the self-interest threat. In this case, once again, we're concerned about whether or not we're working towards serving the public interest first. And in this case, maybe literally trying to motivate the client to do something would actually benefit us as well. So therefore, we're not actually doing what's right for the general public. An example might be clients making up to 80% of your revenue. Now, by the way, I used a very large percentage then, but it could be any amount, say in excess of 10%. That becomes material, and that could create a self-interest threat where you don't want them to go down, you don't want them to be mad at you, so you're constantly interested in keeping them happy. We also have the self-review threat. Regarding the self-review threat, once again, it's you're concerned about an individual in the member's firm that literally will rely on services that have been performed. You've performed these other services. Regarding working in industry, it's the employee's organization and obviously literally looking at some of the work that you may have also performed. So in this case, let me give you some examples. If you prepared the financial statements as the outside auditor, or you did most of the journal entries that they did, and now you're going to audit them, that creates a problem. Or if you get others, you should in that case obviously get others to perform those related areas so that it's a second set of eyes, not you, the same set of eyes that's doing the same amount of work. Then we have, in this next area here, we also have the auditor proposes so many journal entries that they are effectively auditing their own work, as we stated a little bit earlier. The next item is the undue influence threat. When it comes to the undue influence threat, this is also a concern with the client, where maybe they threaten to fire you if you don't agree with what they're doing, or you don't agree to lower your fee and reduce the amount of work associated with it. The threat of firing the auditor is the undue influence threat. And with the company personnel, if they want you to do something wrong and they threaten to fire you if you don't do it, that would also fall within that category right here. So those are your undue influence threats, and all 7 threats we've now covered, and hopefully you have a better understanding of each, and you're now ready to work an exercise that challenges that understanding.